Hello, friends. Welcome to Nirmal. I'm Piyush and today we are bringing to you another conversation with a market expert, but on a particular asset class, which is a traditional favorite for Indians since decades and ages. We are talking about gold. Gold has been in the limelight this year for all the right reasons. The prices actually are touching in Indian rupees at record highs. We also actually are talking about over the last almost 5 months, gold prices have outperformed in US dollars, in Indian rupees. There has been also a lot of buying happening again across the world, whether it's central banks or you're talking about sort of strong demand initially from funds. But there has been a lot of new data points where we are seeing some profit booking also from investment funds. A lot of questions to ask. But now for that, let's go to our expert. Let me welcome our guest today, Mr. Somasundaram PR, the Regional CEO, India World Gold Council. So welcome to the show.
Thank you.
Now, sir, as always, there are so many questions to really ask you, and I'm very sure our viewers, they look at gold from all the sort of interest aspect. So first, let's start from the perspective of global markets. Last 2 months, in fact, last 12 months, but now also more probably the last 2-3 months, what's happening? There has been some fear in the financial markets, and we actually are seeing some interesting shift to the gold here. What are you making from a sort of data point of view?
Well, as you can see, the gold prices, even in dollar terms, are going up. Clearly, there is a flight to safety. In such moments, that's what gold is supposed to perform, and I think it's performing it true to its style. When it comes to ETF, you might hear that there have been outflows, as we always constantly update. There have been outflows, and that's to do with the fact that the US interest rates have been going up. So, in a sense, short-term investors do find that the cost of holding gold has gone up. Right? As the rates go up, cost of holding gold has gone up, and compared with 2 years ago when interest rates are practically negligible. So, cost of holding was nothing. Today, that's a different scenario. Since gold does not give a coupon, you have to depend on the price appreciation over a longer period of time. And as the prices keep jumping, the headroom for an immediate rise also is considered by investors. And they find it probably better to take some profits and move on to other bonds and other stuff. So that's what is happening. But when you look at the retail part of the portfolio, even in December quarter, what we saw was that while there were outflows in ETF, the bars and coins demand was quite robust, even in the Western markets, even in Germany, Europe, USA, all these markets, of course, India and China. So you do see that it is just about the ETF, which has got a slightly different story because it is more closely linked to the interest rates. But the bars and coin story tell you something very, very different, which is more long term. Because when a person buys the bar or a coin, he's not going to rush to exit. So that shows a momentum, a long-term holding mindset.
I'm just jumping in between, so which also you're saying that the physical demand remains very strong, but the financial demand perhaps is, as it is expected to be volatile, reacts to the market scenarios. But the physical demand remains very strong. Is that what you're highlighting?
Absolutely. So that is what we see. But central bank buying has been very robust. As you know, in the last 50 years, central banks have never bought 1,000 tons, even during the gold standard. So that also tells you a very, very strong story in favor of gold. So if you really combine these, actually, with the exception of minor outflows in ETFs, you find that the gold is very highly supported now. And it's performing its role in times of uncertainty, and that's the story as of now.
I would actually say, on the behalf of my viewers who would be actually sitting and watching this interview and would be thinking, the central banks are supposed to be very intelligent, and then the common man. So central banks have been buying since last many months. What it tells really, are the central banks thinking that perhaps gold prices should be way higher than where they are? Are they thinking that the gold prices are undervalued with respect to inflation or the currency aspect, and if the prices are going above, they should invest more in the gold allocation over with respect to the entire basket? So, as a common man, should we expect it? Uh, Overall, sort of thinking is bullish on gold.
Well, I would not draw conclusions on prices from central bank activity. That's actually not that, because central banks don't do things because the price is very cheap now. They don't go and buy gold. They take a very, very long-term view of the reserves. Every central bank does that. For them, safety is at most importance. Then comes liquidity. Only the third one is the returns, okay, profitability. So for them, actually, in fact, liquidity and safety comes together in that sense, because that's a country's reserves. So they do not act or react to prices and price movements. They have a very long-term view. So what it tells us is, when central banks buy a large amount of gold, and it is not also localized to one or two central banks, it is distributed. Although China has now come back to buy in big volumes, it is distributed across banks. What it tells you is that there is a long-term story in gold in terms of diversification. So I would probably not put anything more than that, but it is a very strong diversification story amidst all that is happening around us. And that is very strong support for gold.
Rightly said. I'm trying to put reasons here. Rightly said that yes, central banks will take a very long-term view because they are the custodian of the country's treasury. But on the other side, what it will tell me, is it telling me because the gold normally is priced in US dollars, like as a global reserve currency? What is telling me, is everybody betting around that dollar is going to weaken, so gold prices are going to go up, or is everybody betting around inflation, due to inflation, the long-term view that we really need to sort of park more in the gold? Why is every bank actually buying gold?
Well, if you really look at it, people who are buying gold don't already have huge amount of reserves. If you look at US, 74% is,
Yes.
is backed by gold, right? It's not the case with India and China, which are the fastest growing economies, right? Therefore, it is not anything strange. It's not surprising to see India, China, Russia and all buying gold. India and China in particular, right? And also many of the other banks which have bought gold. So I would not probably say that this is entirely driven by a relative asset class verification, like you are thinking that dollar is going to weaken or something like that. The point is, definitely gold's diversification properties are in focus, and they believe that it will be a very active role in portfolio diversification, given all that is happening around various asset classes, countries, what's happening to the asset classes in general, equity markets and others. Therefore, it is more a diversification story and also a story of growth of these countries, rather than simply saying that, oh, this is against a particular asset class, or this is probably telling us something that dollar will weaken. Clearly, there has been, a talk about gold being a counter to dollar, but that's not the real story behind it. The story is, there is a role for every asset class in a country's reserves, and that's what central
Absolutely.
banks are probably focusing.
So now I come back to a sort of more financial question now. The earlier question was more of a viewer question. So now the question is, if I think about the Indian bank here, we are growing very fast, the largest and the fastest economy from a high growth economy. I'm not talking about size. Um, from another aspect, tax revenues are growing very fast. So obviously the foreign reserves actually are growing nicely because there are a lot of remittances are coming up. So if RBI is thinking that I should allocate this much percentage of my treasury into gold, that also tells me that RBI should be continuously buying till the time their sort of long-term targets, along with the rising foreign reserve, doesn't actually get met up. And then the secondly, I'm just thinking it's a pre-election year, and we know what the history tells us. So, what are your thoughts right now? How's the sort of buying in the Indian market from India is looking like on gold for 2023?
Yeah. First of all, as I said, we don't talk about individual central banks. We just don't do that, because each one bank's strategy, how they want to manage it, differs. We talk in general about overall buying, and the reasons for buying, clearly drivers are diversification. Coming back to the retail part of the story, what we find currently is, obviously prices are going up. So people who bought a year ago, actually even at the so-called high price at that time now are sitting pretty, right? And that's exactly how gold behaves. And this is also the sentiment that has been repeatedly expressed by consumers in India and China. Even way back in 2013, when prices dropped by 28%, when we did a dipstick in these two markets, consumers were always very, very bullish about gold. And that's paying off in a sense. So what we see is in the immediate run, people will stop to see whether the price rise is a blip or is it sustainable. Is 60,000 going to sustain itself or will it drop to 58,000? So can I defer my purchases? Still, I'm very sure about it. Unless so that immediate cost or immediate effect of a price increase will be people will defer purchases. But what happens is people like price increase. That's why they buy gold. All right. So once they're convinced that, yeah, this is more sustainable, you will find that buyers come back in a very, very large quantity. And when seasons also coincide, you will find that purchases spike up. Now, could it happen in 2023? We've got to wait and see what happens in Akshay Tritiya. We've got to see how the monsoons pan out. And then you will obviously have the fourth quarter, which is always one of our best quarters. And if all these things, if prices hold out in Indian rupee or keeps going up, then you will find that people come back to buy. Because fundamentally, what drives the gold demand is not price, is not even, I would go to the extent of saying, not any other factor. It is income. We have shown it repeatedly. We have done an econometric analysis. 1% increase in income over 25 years leads to a 0.9% increase in demand.
Okay.
Whereas a 1% increase in price leads to a 0.5% decrease in demand. It's not a 1% decrease in demand. So income has a very strong influence on gold. Reason is not far to seek because our per capita is still very low. As people from the lower end of the economic hierarchy just move up, the first asset class they seek out is gold.
Gold. And then basically they go to property and then anything else.
Exactly.
Absolutely.
So economic growth is what actually keeps the momentum for gold market very strong in India. And we have a lot to come. That is why you're very bullish about gold demand in India.
Well, listening to you, I was just thinking again, the sort of biggest rising middle class and that sort of shift from low strata to middle class, it actually might be telling that we actually could be in the golden decade of gold from an Indian demand perspective. So I was just actually relating to your analogy. Moving from there, slightly shifting for a while to the sort of jewelry sector in India. We have been hearing representations from the Indian jewelers, the associations about the hallmarking. What are your thoughts? What's happening? What are you hearing from the government? Is that something which is really something very material from a perspective of demand or how the suppliers are handling it? Your thoughts?
Well, at the moment, as you know, hallmarking is mandatory. Although it is restricted to, I think, if not all the districts, I think 350 districts or something have been covered, but they predominantly cover bulk of the demand that we have in the country because the manufacturing centers are all covered in this 350 districts. There is also this additional aspect of HUID, which is the unique identification number on a jewelry, which hasn't really caught the fancy of the jewelers. Let's put it like that. They believe that this could cause a little bit of fear amongst the consumers. And also they have presented certain operational problems. From the government side, they have said that all these problems have been sorted out. I also hear the same thing from the Hallmarking Association, that India is now ready to roll it out in 100% basis. So from 1st April, the government has made it mandatory that every hallmarked jewelry will be a HUID jewelry, which means you cannot have a parallel system where newly hallmarked jewelry is HUID, old inventory is non-HUID without a unique identification. I don't know whether it will get implemented on 1st April or there will be further deferral, but in whatever form, fundamentally, quality is now a primary focus. If you want to become a big exporter, you can't simply say, I will produce excellent quality for the overseas market, but locally, don't worry about it.
Yeah.
Okay? So hallmarking is fundamental. I think it cannot be deferred anymore. It will get completely covered across the country. HUID is a very unique idea of the Government of India, Bureau of Indian Standards, and it has potential to be taken across other countries as well. In fact, I see HUID and the technology backbone as something with which India can lead in other countries as well.
Please help our viewers understand the uniqueness of HUID. I'm very sure many of our viewers they won't be actually understanding it so far. So let me take 2 minutes of yours and slightly understand more about HUID.
Well, HUID is every item hallmarked has a unique identification number. It is there on the jewelry that has been hallmarked, and you can actually go into a website of BIS. If you put that number, it will give you the entire birth certificate of that piece of jewelry, who produced it, who hallmarked it, and all that stuff. So the jeweler's name, the manufacturer's name, everything comes out. So it is, in essence, a good form of responsible sourcing, you can say that. It's an extension of that. Because that responsible sourcing is more on the bars, so that you don't get from conflict areas and things like that. In the jewelry side, there was nothing like that. Now that has been introduced. And the good thing about it is technologically backed. Now, can that be fake HUIDs? I think government has taken lots of steps, because you can easily input the number and see whether it is really the jewelry that has been sold to you or not. So if you are actually using a fake ID, you could identify it. So from the government's point of view, from the BIS point of view, I think there is a lot of merit in what they say, but there were certain teething issues with the technology as well. So the government gave time for the jewelers. They said 2 years. You can sell non-HUID jewelry also alongside. But now the government has taken a view, no, every hallmarked jewelry must have HUID. And if you are holding any old inventory, go back and get it numbered. So that's what is now coming back. From the consumer point of view, it's a great value addition, because you can really check whether what you're getting is authentic or not. And it has got all the details there. So you could verify many details from the website itself, going by the number that is there in the jewelry. So this is, in simple terms, a kind of what I would say authenticity certificate, which is technologically backed.
And also might become a sort of digital repository of all the sort of gold jewelry. Would that be a fair thing to say?
Well, yes, it can be, but I want to just make that very clear. Even today, there is a repository. All
Okay.
right. Even today, there is a repository. It is in manual form. So
Right.
the fear that
Technology can create wonders. We actually have seen how the GST things have actually really sort of showcased.
Absolutely, and it is not like the hallmarking centers earlier were not having individual details. They were having the individual details. Can always be cross-checked. It makes it a lot easier, and
Yes.
I think we should feel proud about it, because when we
Absolutely.
talk about what has happened on the banking side, the payment side, obviously we're all proud as Indian, the digital ecosystem that is developed here. I think it's very important to give a lot of credit to BIS as well. I know a lot of support has come from trade, but they're also presenting certain teething problems. But I think very soon you will see India has this backbone of HUID, which the rest of the world could probably use.
Absolutely. Something which, like UPI, can actually travel the borders, and that should be interesting to see. I want to actually travel for a question to China. How's the physical demand signals coming from there?
Well, as you saw, the March quarter figures have to be seen. What we have to see, because there's still another week to go, and then we will come out with our demand trends for this quarter. But what we have seen is, it has bounced back. It is the same case with India as well. The retail demand is not as high as one would expect. And India, there are some specific reasons as well, because the high price. That's clearly, as I said, consumers react the same everywhere, right? I mean, they want maximum amount of jewelry for a certain amount of cash, right? And when the prices go up, they just hold back to see whether is it the right time to buy or can I defer it by a week. And I mentioned to you, they want to see that this is not a blip, that this is a sustainable increase. So it's the same thing happening there. But at the moment, there is nothing very specific to say that the Chinese market has grown tremendously now or is actually in a discount or anything like that. No.
Okay, sir. And a word around how the sort of overall outlook looking to you, if I may ask you, from a perspective of silver, is that something where you can comment on silver also, or no, only on gold?
We don't.
Fair enough. Fair enough. I was just trying my luck. So, sort of rounding up our discussion on what we've talked from a World Gold Council perspective and from a global perspective. I took your knowledge from an Indian market perspective. From a global perspective, how's the World Gold Council looking at gold for 2023?
Well, as we said, the price rise has been hurting the consumers everywhere, and you will have a similar reaction generally. When the prices rise, people have to take a call. Do I buy now or do I buy a little later? So that's panning out everywhere in all the markets. But otherwise, you will have to wait for another 2 weeks or so before we come out with our March report. And we do normally come out. We do publish our reports on the ETFs because they're publicly available, and we do get some insight on that. And you have seen what is the figure.
I read that.
Yeah, but in terms of the retail demand, we find that the retail demand definitely faces headwinds as of now. That's the honest statement. But we should see how it actually pans out, because if people still believe that it is going to go higher than this, then you will find enormous buying even in the next couple of days. But as of now, the retail market is facing headwinds.
Okay, so that's a sort of takeaway, and I would sort of take 2 points here. But you might see, for our viewers again, you might see some sort of wait and watch from the retail viewers, but retail buyers. But let's remember what Sir has just told. The central bankers buying gold is a big story over the last few months, and that is something we are watching in 2023. So with that, sir, thanks a lot for coming on the show and enlightening us about the gold trends and how the entire world actually has been reacting or following on the gold movements. And we also sort of look forward towards meeting again once your quarterly report comes in. And I think we'll again catch up in terms of how the trends are shaping up.
Sure. Thank you very much.
And with that, dear viewers, it's a wrap on the show. Thank you for watching us.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.